Morgan Stanley and Goldman Sachs shares did come under some pressure in the pre-market, even though they beat expectations on earnings. Let's have a look at those stocks right now. And let's get more from Colin Cieszynski, Portfolio Manager and Chief Market Strategist at SIA Wealth. Colin, great to see you, and thanks very much. Start off with Goldman Sachs. Apparently, they set a revenue record.
Absolutely. Goldman Sachs put up really strong numbers. They also crushed on estimates. And I'll just note quickly, we do own both Goldman Sachs and Morgan Stanley in portfolios that we manage. So it's a very good day, and we're quite pleased with the numbers that have come out. And so Goldman Sachs, they also had sold off their credit card business along the way with a gain on that. But generally speaking, they were very pleased with their results, and they saw results coming from wealth management and coming from trading and asset management. So across the board, a very strong quarter for Goldman.
Yeah, we did hear Martin Cobb, the stock up around 2% right now. We did hear Martin Cobb of Lawrence Steinberg Wealth Management earlier, who, let's forgive him his sins, he used to be a bank analyst, he's saying that these big US lenders are generally trading at fat multiples of their book value. Would you be putting new money into them right now, Colin?
At this point in time, they're continuing to do really well, and all indications are that we're in a very robust environment for the banking business, for the brokerage business, for wealth managers. We've this week we saw positive retail sales. This morning's numbers out of the States, the two manufacturing surveys, New York and Pennsylvania, very, very much stronger than expected. The U.S. banks that had reported earlier in the week generally had smaller than expected loan loss provisions. So at this point in time, the banks have been doing well and continue to do well.
Tell us, Taiwan Semi, apparently like other players in the chip market, including the memory device providers, it's just turning away orders practically. They just can't make enough chips.
They had very, very strong numbers reported overnight. And that's quite impressive because it helped to turn around sentiment towards the whole sector. Yesterday, we had technology stocks in the NASDAQ getting absolutely hammered. And we've seen a lot of weakness for several weeks of questions over, can this AI-related growth continue? Well, now Taiwan Semiconductors numbers came out overnight and said, yes, they can. They blew the doors off their numbers, and this not only turned their stock around, it turned around the entire global chip sector. We saw rallies in Europe, and we're seeing rallies in North America this morning. So quite a change of sentiment off of just one number.
What do you think, Colin? Are there going to be tears in the end with these AI stocks, especially if somebody like OpenAI, which has so much debt and such aggressive spending plans, runs into trouble?
Eventually, we saw that 25 years ago with the internet, where when it first came out and there was huge potential and all kinds of stocks ran, and then at some point there was a shakeout. We don't know when this is going to happen, but anytime there's a new technology, eventually there's a shakeout and you get winners and losers. And there were losers who failed spectacularly, but there were winners who succeeded spectacularly. So there are opportunities. There are also risks in the market.
Are there any risks other than a possible tech sell-off, any broad risks in the market or economy that you think investors are underestimating right now, Colin?
There's a few things. I mean, one is just general, I call it political sentiment, and we're seeing it this week right now in the oil market, and this week it's Iran in focus, and a couple of weeks ago it was Venezuela, and we've had Cuba and other countries kind of go in and out of Greenland, to go in and out of the political risk space, and so we've seen overnight, the last 2 days, people were starting to worry about, could the U.S. attack Iran? Well, the oil price went up, and then overnight, President Trump kind of said, well, maybe they won't, and we see the oil price come right back down again. So that can impact energy. That can also impact metal stocks as well. The precious metals, of course, tend to go back and forth quite significantly on greed versus fears. So it is those are certainly ongoing. I don't want to call it like a major risk, but certainly ongoing significant volatility in those spaces. The volatility goes both ways. They could go up, they could go down. So that's significantly, and that can change day to day, and as we've seen sometimes even within a trading day. So it's that's one to always be definitely be keeping an eye on.
Do you feel we're in a strange era now, Colin, with so many opportunities to gamble on sports, whether legally or illegally, and then the likes of Polymarket and Kalshi blurring the line between investing and gambling? I know investing to some extent has always had, a gambling aspect to it, but we really seem to have those two worlds moving together right now.
It's an interesting one because a lot is going online, and so, for example, we've heard rumblings over the last 2 months that the traditional casinos are having trouble. We've seen rumblings over the last few months of Las Vegas traffic being way down, and just recently Halifax indicated they're closing their casino downtown and moving it over to Dartmouth. So there's definitely changes in the sector, and yes, there is a blurring, and we're kind of now getting more like Europe, where you can bet on just about anything, and it's intriguing at the same time when you think of things like the poly market and things like that as well, because they also give intelligence, because there's a big difference between a poll where people can get on the phone and say whatever, and a betting market where people are stating their opinions with their money.
Yes.
And so it's quite different. We've seen that develop over the years in the election markets, and that's now spreading out into other areas.
Yeah, it reminds me of P.G. Wodehouse and those dim-witted English aristocrats in his stories. They always were able to calculate complicated odds on horse racing. I always, in every other respect, they were pretty dim. Colin, thank you very much indeed. Colin Cieszynski, Portfolio Manager and Chief Market Strategist at SIA Wealth.